Today, we're talking about Rivian. After catching everyone's attention with recent Q3 deliveries, the company's recent earnings report brought even more excitement. And of course, we're going to talk about Rivian ending its exclusive contract with Amazon. We're here to break down the highs, the catalysts, and what this means for your investment journey. Let's get started. Rivian's recent Q3 deliveries and earnings report have garnered a lot of attention. We're going to go into some more of this in detail throughout the video, but Thomas, if you would, start us off by filling us in on the highlights here and give us a brief overview of their performance.
Yeah, I thought it was a pretty good report. They had pre-released their Q3 production and delivery numbers, so there was no surprise there. Those were just as expected, but the revenue and the loss were better than expected, so we have outperformance. They also raised their production guidance, which to me is a really critical factor. They're raising production guidance even while other EV manufacturers are lowering theirs, which tells me they've got demand present. In this light, I expect to see Q4 results outperform and for there to be some pretty solid guidance for next year.
All right, of course, we're here to talk about what we've seen in the news. I'm sure that our viewers have been reading all about this too. But Rivian recently ended its exclusivity contract with Amazon. So that's going to allow them to sell EV delivery vans directly to the broad market. So tell us a little bit more. How is this going to impact Rivian and others, Chris?
Well, so my initial inclination when I saw the headline was to look at the article. I was kind of trying to be a contrarian and think, where's the bad news here? And I really haven't been able to find any. I mean, to me, this is a win-win for Rivian. I mean, on the one hand, it didn't lose any business from Amazon, and it still has about 90,000 vans that it has to fulfill from that order. Plus, it gets to directly sell to a market in a category of EV that might be more receptive to the technology than maybe the passenger vehicle consumer side.
Yeah, right. The big news for me in the report, bigger than the guide, really was the deal with Amazon. That exclusivity contract really locked them into only selling to Amazon. This opens up a multi-billion-dollar per year growth opportunity. I see this leading the company to double its revenue more than once over the next few years, and that's not counting their core line of cars.
All right, so going off of that, Thomas, in your article for Marketbeat, it's a really great one, by the way. You had mentioned Rivian's leadership position and kind of the moat in the electric vehicle delivery van market. So tell us more about your statement on that. What is setting Rivian apart from competitors in this space?
Well, number one, it's producing vans at scale. There are other manufacturers making vans like Workhorse Group and Mullen Automotive. They're in the early phases. They don't have the entrenched business that Rivian already has, and Rivian's fleet is proven. Amazon has more than 10,000 vans on the road, so if there was a problem with them, we would know about it by now. And then the entire Class 4 market is so huge. Today, it's worth about $160 billion. It's expected to grow at a 5% CAGR for the next few years. And within that, the EV segment is supposed to expand at a 35% CAGR. Right now, EV is about 1% of the whole Class 4 market. This is an incredibly huge opportunity for Rivian, and they are the clear leader right now. The other companies may gain some share in this market, but Rivian's always going to have the most share the way things look right now.
Chris, what have you been seeing here? I know you mentioned that you don't really see the downside right now with that, but is there a downside?
Well, I think right now the downside would be more in the broader macroeconomic story. If you're looking to invest in Rivian, you're going to want to listen to a lot of the points that Thomas just made about the opportunity they have with the Class 4. As far as it relates to the price action on the stock post earnings, I think it's one of those situations where Rivian Rivian delivered a good earnings report at a time when, in a quarter when many EV manufacturers either delivered disappointing results or just downright bad results. So, I don't think there's really, the stock went down. I think that's just literally more having to do with the broader economy and investor sentiment in general. I don't think it necessarily had to do with Rivian specifically.
All right, let's touch on margins here. Rivian's margins appear to be positive despite some increased costs. Is there anything investors need to keep their eye on here, Thomas?
Man, it's profitability with these EV OEMs. It's really all about profitability. They didn't make money this quarter, but losses are narrowing. They were better than expected, and this leverage should continue as they ramp production and sales. I see profitability getting closer. I would expect to see some analysts start coming out with some chatter that says, profitability is going to happen sooner than we expected, which will be the real catalyst for the market. And just speaking to what Chris said a minute ago with the chart action, there's a lot of technical resistance to higher prices. There's lots of great fundamental reasons for the stock to move higher. But right now we've got short sellers and just overhead resistance from people whose initial positions are down from last year. Once we work through that, I think that the stock will have a pretty clear upward trajectory.
All right, so MarketBeat is rating Rivian as a moderate buy. Analysts are seeing the stock price ramp higher. Do you have any final thoughts? By the way, I have seen a few Rivians on the road. I think they're sharp. Are you hearing me, Elon? But what are your thoughts on this?
Right. Like I just said, there's lots of reasons for the stock to go higher. The question is if it will, when it will. There are still some risks. Profitability is a big one. Short interest is still substantial. The market may not recover quickly, but I think that dips are good times to buy. Be prudent, build a nice, small, manageable position, and over time, it should pay off pretty well.
Yeah, I mean, as an investor with a long-term focus, Rivian is intriguing to me. Right now, do I want to get in on the stock? I'm not sure. One thing that I'm noticing, and Thomas was bringing that up, is that right now there looks like there's a level of support that was the level of resistance about 6 months ago. So it'll be intriguing to see if the stock establishes that as a new base of support. That'll be a good thing for investors to keep an eye on. Also, I was a little surprised. Thomas brought up the short interest on the stock. It surprised me that you didn't see more short covering with Rivian. So, that's something else to watch in the short term. Again, that's as far as you might not want to just go all in on Rivian right now. Start a small position, build it over time, watch the price action, and figure out where you're going there.
Yeah, right. Because that initial pop was a lot of short covering, but I think that the shorts just sold into it. They sold it down. Some short selling, some profit takers from near-term gains. Also, people trying to trim out some losses from last year. So, like I said, what Don calls overhead resistance, it's there. We got to work through it. Once it's gone, this stock should move up.
All right, well, great insights there. I think that wraps up our dive into Rivian's recent performance. Remember, the road ahead for Rivian is filled with potential catalysts. So whether you're eyeing this as a long-term investment or considering a strategic move, stay tuned for the twists and turns. We're going to be covering it right here at MarketBeat. So check back with us right here. Thanks, guys.